Hello, everybody. Welcome to the Daily Recap. I'm Pete Renzulli, Chief Marketing Officer of T3 Live. Actually, I'm looking at the charts instead of looking at the screen. Interesting day today. It's the first day in a while that we had a gap, and we did not fill any portion of the gap. Pretty much for the last 5 or 6 weeks, we've had one of two things. We've had a trend day where it's been very clear you want to be long or short, or we've had a day which has been about 75% of the days going back to the beginning of July, which is what we would call a doji. And dojis, no matter how you want to translate them, represent indecision. And there's been a lot of frustration for lack of clean follow-through. And there's two different ways of getting that. One is intraday, and the other one is from close to the next day's open. And we just haven't been getting that. But today, I have to be honest, I think a lot of people got caught off guard today where, because we've been so used to not getting the follow-through, it was a tough long, and for the first 90 minutes, 2 hours of the day, we actually did get some follow-through. And I saw a lot of traders, including myself today, where we lost some money short anticipating the gap not following through, especially because we got up to the 138 resistance level, which we'll take a look at in a second. And then in the afternoon, you would have expected the fact that we held as strongly as we did all day to get another push through, and we ended up selling off at the end of the day. So a little bit more of a challenging tape that you should be keeping your risk down on both a trade-by-trade basis as well as with the overnights, because we're just not getting clean follow-through. After what we had yesterday afternoon, we closed off the lows a little bit, and then we have news overnight, and we have this monster gap up. We go gap right into resistance, and we basically don't do anything after the first 2 hours. Now, that's actually constructive, the fact that we did hold up in that range. But there, again, intraday, there really wasn't a massive amount of opportunity. But there is some stuff that's interesting to pull up on the charts and be aware of. So if I could just go to the charts first. Obviously, Scott and Evan have been looking at this channel in the spiders for a while now, and it's very, very clear. And if you extrapolate it a little bit, it looks like the next level, if we go out to the top of the range here, is going to end up being, if you move that out, it's going to end up being around 141, where the next level would be if we stick to this channel. Now, the interesting thing is if you're just going off the moving averages and you're looking at where we are and saying, I want to be long or short, it's clearly a long from the last 2.5 months. We keep making higher lows, we keep making higher highs. It's just that the price action in between it's aggravating. There's really no other way to say it. I mean, we actually had a conversation in the private room this morning that we've been mastering the art of taking the small loss recently, and if you do that okay, when you get a little bit more of a clean tape, you can size up a little bit. And if you happen to trade here on the floor in New York, a lot of the floor is empty because it's just not. It's actually cheaper to leave early and go have a nice dinner than it is to stick around and get chopped around in the mess. And this afternoon was a good example of that, where a lot of the stocks that were strong, instead of holding near their highs, had a pretty good half-hour, 45-minute sell-off. But even that being the case, there are some stocks that we can look at to set up some sort of a game plan for some significant numbers. And the first one I want to talk about here is Exxon Mobil, XOM. And this is one of those situations where I actually have been looking at this. I'm actually going to go on a little bit longer time frame to make it a little easier to see. That is a monster level around this 87, 75, 88 level going back to the beginning of 2011. You must be setting an alarm for this stock. I actually shorted it this morning after a gap up, got into the resistance. I started putting the short on because, let's face it, we haven't been able to get over this level in 18 months. So it's not a hard trade to say I'd like to short it because we haven't gone through. The problem was we got up to the level, we paused, pulled in a little bit, I added to the short, and then we took off. We rallied for about 65 cents, took another anticipated or planned loss, and it just didn't go anywhere. So it's been that kind of tape where the breakouts aren't following through, the breakdowns aren't following through, although Starbucks we'll take a look at in a couple of seconds. That did follow through for a couple of days after earnings. But again, the theme is in this tape right now, you have to work positions if you want to get some size, or be very comfortable bidding into support, short selling into resistance, and not buying the breakout or the breakdown because they're not following through. So a part of being a good trader is you have to recognize the trade that works for the environment. And right now, with all the dojis on the daily charts in practically all of the indices and a lot of the individual stocks, you must work the trade a little bit. And something else that you need to learn as a trader is all the days are not the same trade expectation. So you have to learn to be comfortable with trading a little bit less and not risking as much when it's a little bit of a tighter tape. And that happens to be what we have right now. So if you're not losing that much, and actually Evan said it in the room this morning, he said if you're holding your own in this tape right now, you're actually doing a pretty good job. And again, I'll go back to something that Mark said at the Active Trader Summit here in New York City about a month ago, 3 weeks ago. You need to know what area you live in so you know when to excel. And Mark actually used the numbers where he said about 40% of the year is where he makes all of his money. So think about it. If that one of the best traders around, and certainly one of the best in the T3 Live community, as far as I'm concerned, from me watching him, if he's saying that, use that as an experience into your own trading to say, well, if Mark, who everybody perceives as a very good trader, is saying I make most of my money 40% of the time, dial it down a little bit to learn when that 40% is there for you based on your style. So that being said, enough of that little bit of lesson. Let's actually get into some stocks. First, I want to go to some of the financials, some pretty good days today where a lot of them, if not all of them, cleared some levels, closed very well off of the lows, and are setting themselves up for a trade on Monday with some room to go. So we'll start out with PNC here, shoot over to STT, basically the same chart. Now the interesting thing here is you see we have two different gap reversals. You go back to June, we had one down there, we gapped down, island reversal down there and pushed up and into multiple gaps. Same thing here the week of June 23rd. Tried gapping down yesterday, and now we reversed again. So in the course, in the active trader course, we actually call that a professional gap, which is a gap in the opposite direction of the previous day's close. And this was a complete opposite direction. Again, you could have definitely made a good case for short selling this gap to the upside, below every moving average that you could possibly look at. Gap down yesterday, opened up today just above yesterday's high, filled the gap. Every reason in the world to say classic technical analysis, put the short on. Didn't follow through. If you had your planned losses, no big deal, just part of doing business. But here's the point that I want to make. You'll learn to believe in your strategy when you take the same trade and it doesn't make money, and then you take the same trade again, let's say in a different stock, and then that trade might follow through. Or even if it doesn't, that's okay. You become successful, or you put yourself in a position to have success because your strategy works over time and you implement it all the time. And in this case here, and I'll tell you my own trading today, there were some trades that I took today that I'm like, I'd take that trade 100 times, just didn't follow through. This is a trade. I didn't trade this. I pulled the stock up. I would have shorted this after yesterday's gap down, which was a pretty significant one, opened up into the gap, filled the gap, regardless of the news. I'm not a news trader. You know, a lot of people talk about the macro this and the, I don't care. I'm a chartist, same as Evan. I would have shorted the stock today, and I would have taken a reasonable small loss like I did in the XOM today. However, we're setting up Monday. That's the whole point of doing the recap. What happened today, but more what are actionable signals? The stock is getting to a point where if it clears these levels, you have what I call room to go. You set up your trade, you look to see if it has room to go, and then you look at the risk and say, what are the odds of the profit target being reached for the risk I have to take? We start to clear some of these levels. A lot of these financials have room to go, which means profits. Next, we have WFC. Wells Fargo, this is obviously coming up to the level, very big like Exxon Mobil. 34.50 has been the level for a while now, pretty much for the last 5 or 6 months. We're back at that level. Strong day after yesterday's week close. You can see a big topping tail here a couple of days ago above 34.50, pulled back. The grand question is, when do you get involved? Well, really it boils down to what kind of day are we having? Is the sector good? The better the market and the sector are, the sooner you can get involved. If it gets up to 34.50 and the market's a mess or not as obvious, let it pause above there, whether it's on a 15-minute or 5-minute chart. Don't buy the first time it breaks through. Let it get through there. Now, the question that comes back all the time is, what if this time is the real time it finally pushes through? Big deal. If it's the real move and it doesn't come back, then you got a good trade. So you get the second pause, not the first one as soon as it gets through. So definitely have Wells Fargo, WFC on your chart. Next, we have Goldman. Actually, this has been all over the place lately. It had earnings over here, gapped up above 100. Pulled back, gapped down again. Scott's been calling out this support for a while now, and you can see we've clearly been in this range. We had a really nice push 5-6 days in a row. We consolidated, gapped down yesterday on the news, but held the level that was the resistance for the most part, basically closed right there, and now we're pushing up again. In the active trader course, we would call this very, very simply a catch play. Push through the level, come back, hold. Not quite a change of trend. I might call it a potential change of trend where you can get an early Tier 1 or early first position to build, looking for potential move. And you can see the next level up there is just about 104. XOM I talked about. I want to go out to the GLD and talk about this on a monthly chart because it's much easier to see the pattern here on a monthly. Look at that. We are consolidating, consolidating, consolidating. Even if you're not trading this on a regular basis, it is imperative you have this on your alarms at this 145-ish level, 150-ish level. You want to hop on board when this finally breaks out, because the bottom line is right now there's an agreement on what the price is. If and when a catalyst comes in here, it's not going to stay at this price forever. No stocks ever do. When it does, you want to make sure that you're on board. So keep an eye on this GLD. Again, even if it's not on your radar every single day, set the alarms, and if it finally breaks one of these ranges, more often than not when it does, you want to be on ride. Next we have some retail stocks, Kohl's, KSS. Let me go back to the daily chart. You can see a little cleaner here. Kohl's had a nice run. Basically bottomed out at that 43 level, a couple of dojis down there. Nice push-up pause, another nice push-up pause. And now we're back up into resistance, right around this 51, 51.50 level. You're starting to see we're getting topping tails here, which, as we said before, is indecision. Pushed up to 51.50, same thing as all the other ones we're talking about. Let it get through the level, because now it's having a hard time getting there. However, if it does, it must be in your list. You want to hop on board. If a stock finally gets to a level, consolidates at that level, the longer it stays at that level before it sells off, if it doesn't sell off, you want to be on board. This is another one, 51.50 in Kohl's, KSS. Even though it doesn't have that high beta volatility, you want to be on board when the stock's making new highs. It's classic trading. Go back to Jesse Livermore, reminiscence of a stock operator, trades through par. That's where we're watching Goldman Sachs at 100. Gets up to these levels. You don't want to fight these big levels. All right? I told you I took the short sale today in Exxon. I had a planned risk. If it got through there, I was out. It got up to the level and came right back in. So it's still, I got a couple of shares short. I'm short the spiders and I'm short Exxon right now. Not that many, though. Light, look, based on today's closing. Next, we have Macy's. Kind of the same thing, starting to push off there. Again, you can see very cleanly here, we made this low, false breakout, higher low, and we're pushing up again. And you can see we just cleared this resistance. You got a little bit of resistance, 38, 39, but if we clear that level, you got a nice run with room to go to 42. Last but not least, we'll take a look at Target. Again, nice push up, held near the highs, 60, 62, pushed above there now. Does it stay there? Nobody knows, but it's got to be on your radar. You look to the left and you see there's nothing there. You got to have these stocks on your list so that if and when these stocks go, you want to be able to catch a couple of easy trades. And easy is relative, meaning it cleared levels and there's room to go. And if I could just touch briefly on trading these breakouts and trading breakouts in general. It's very common to say, oh, the breakout failed, it didn't work. The breakout failed, it didn't work. And when do I get it if it's not? If a breakout is real, it should push through a level or to the downside. And if it holds through the level, on a 5-minute, 15-minute, hourly chart, whatever time frame is your timing entry, stick with the trade as long as it stays above the level, because you only need one of them to work for all of those expected reasonable losses if it pulls back. So what's my stop loss if I trade a breakout, and how do I say when it comes in? The bottom line is this. If it clears a level, I'm expecting it to stay through that level. So whether it's a pause or the first 5-minute close or 15-minute close outside that level and I get involved, I'm not expecting it to break back in. If it pushes through and comes back in, as soon as it closes back in there on my time frame that I time my entries, I'm out. I'm not second guessing it. A real breakout or breakdown should follow through and should not get back into that level that it just took out from. So if it does, pull the trigger. If it doesn't, look for the first pause after those continuation patterns in the direction of the breakout, and you get a couple of easier trades. All right, so just make sure you have the right share size for this environment. Scale into positions if you feel like you got some room to go. I gotta be honest with you, most of the tape right now has been take the profits and then book it. It's really been the better tape right now. We know when we start to see some consistent, consecutive green or red candles with higher highs and higher lows, that we can start to be a little bit more aggressive on both share size, amount of positions, and how long we hold those trades. So as long as we keep seeing these dojis and gaps in both directions, take what's available right now, and then in the VTFs, whether the private room or the main VTF or in some articles, we'll give you some heads up on when we got a little bit of a better tape. Have a good weekend.